Everyone. In a previous video, I covered the first 5 rules of successful real estate investing that I discovered through my personal experience and speaking with successful real estate investors. If you haven't seen that video, you'll find it in the description below. Anyway, these rules reminded me of what to do to thrive in good market cycles and navigate through the rough ones. So here are the last of the 5 rules in the 10 rules to successful real estate investing. Number 6, go deep in your market. When you're considering a market, make sure it aligns with your overall goals. This means that beginning with the end in mind and defining what number of units, revenue, or even units under management right at the beginning, and working to acquire the properties in that area. Look at the overall health of the city, state, and neighborhood. Understand the drivers to the local economy, the job market, and population growth as well. When you understand the demographics and the unemployment rates, you understand what's going on in that area. These are all factors that a sharp real estate investor knows to decide whether they want to be in that area or not. Don't make the mistake that many investors, especially the out-of-state investors, make. They see a nice, newly renovated property, they see the income and expenses, and the price looks pretty good. They end up acquiring the property without even understanding the market. Oftentimes they are sold, D-class property or in something in a depressed area at a B-class price. It would be better for them to either do the deep research to know the area, get on a plane, visit the area, or partner with an active investor in that space that really knows what's going on. Number 7, invest in multiple markets. Now, as we touched on number 6, the different markets experience different cycles. And with that said, you can reduce your risk by investing in 3 to 5 income-producing properties in multiple performing markets. Of course, this number varies on the number of units you're targeting in any given area. So how does that work? All right, so after you build your portfolio, you have strong income-producing properties in an area, you move to another geographically diverse area that has its own economic drivers. It would be best to do something in a different state. So you may consider investing in a different asset class to further reduce your risk. All this becomes easier when you have a team built out and it helps you manage your property. A great property management is always key. You can watch my previous videos on building a team as it applies to doing the same sort of thing, and especially when it comes to new markets. Number 8, leverage your property management team. In my other videos, I've discussed the power of focus. Unless you are a property manager and you're very good at it, you shouldn't be managing any of your deals. The more units you have, the more complex things become. Aside from servicing your tenants, you need to manage the tactical nuances of daily operations. If you're trying to strategically grow your portfolio, it becomes difficult to provide the right attention to your properties. You want to focus on what you do best and remember why you got into the business in the first place: cash flow. Number 9, you got to be a control freak. And when I say control freak, I mean you need to be in control and run the asset effectively. You want to make sure that that property is performing optimally, and the team that you have in place, they have your back. The passive investor that put their money on you, they rely on you to make good decisions and produce a healthy return. That means you must work with your team to make that deal sing. And number 10, leverage human and financial capital. The U.S. is one of the very few places where you can leverage bank money up to 80% along with investor money to get into a deal. Using that leverage can not only build wealth for you personally, but it can also provide some great returns for your investors and your stakeholders. This only works if you get into the right asset. So lean on your team of commercial banks, your lenders, your operational support to make sure you're getting into the deal that you can comfortably sell to your stakeholders and it makes sense to everyone. Anyway, so that's the second part to my 10 rules for successful real estate investing. Remember, as long as you have positive cash flow and operationally the property is performing, you're going to be able to scale and grow your business and make it just do great things for you and change your life. If you like the content, check out our podcast on iTunes and Stitcher and subscribe to the new YouTube channel as well. We're working on getting new content to you guys out all the time to help you guys build success in the world of multifamily. Anyway, be great, guys. Thanks for watching. Talk to you soon.